In this episode of the Seatrade Maritime Podcast, we'll be talking to Tim Smith from Maritime Strategies International about the outlook for tanker shipping in 2026.
Hi Marcus, thank you very much. Very good to be back.
Great, and thanks for taking the time to talk to our listeners. And perhaps you could just, as we have done with the other sectors, give us a review of the tanker market in 2025.
Yeah, so 2025, the market was coming into the year on the back of some lower earnings across 2024, but conditions were still relatively good, if not spectacular, for both the crude and product sectors in terms of vessel earnings. Going into Q2, of course, we saw a lot of volatility. We've spoken about the tariff situation coming into play. That didn't have as big an effect on the tanker sector, and indeed, of course, we've discussed on the wider macroeconomy as perhaps some feared at the time. I think during Q2, what we saw of more influence for tankers was the decision by OPEC Plus to start to ramp up production. And this was announced initially in April, and subsequently we saw consecutive monthly production increase announcements of significant volumes through the course of Q2 and into the second half of 2025. And also the group followed through with this. So we saw oil production increasing from OPEC Plus by a very strong amount, perhaps around 2 million barrels per day across the second half of the year. And that really injected some upside into trade volumes particularly for the crude sector. Alongside this, America's production increasing as well. So we saw longer haul trade coming out of Latin America in particular, from Brazil and Guyana, for example. And that all added to the underlying fundamentals, the strength in the market underpinning the sector in 2025. And of course, on top of that, we saw ongoing geopolitical disruption and uncertainty through the course of the year. We saw sanctions activity increasing, so the US became much more active in terms of sanctioning both vessels and oil infrastructure. We saw Rosneft and Lukoil sanctioned by the US in Q4. We saw other activity restraining Iranian crude imports, for example, into China. And so all this, alongside increasing sanctions on the wider fleet, tightened conditions both from a demand and supply perspective. And in Q4, we really saw this manifest in terms of very strong conditions for the tanker sector, particularly larger crude tankers on the spot side. And VLCCs in Q4 2025 were earning north of $100,000 a day, as we saw both increases of oil on water and delays and disruption related to sanctions activity and other elements. We've mentioned USTR and the China port fees issue as well, coming into play briefly during that time as well. So Q4 was a very strong period for the crude tanker sector. We have actually in the early days of 2026 seen those conditions come off. For product tankers, conditions were not as strong. That market didn't see the increase in trade volumes that crude did. And actually, MSI expects product tanker trade, seaborne trade volumes to have contracted, and not by a huge amount in 2025. And listeners can sort of see more detail on that in our MSI Horizon platform and quarterly market reports on the sector. But it did show in terms of product tanker earnings, which really didn't see the upside that crude tanker markets did in Q4. So we're really in a market where supply-demand fundamentals were constructive from an owner's perspective in terms of earnings. The other element, I guess, that's worth mentioning on the fleet side is that there are still were very few deliveries through 2025. So you also had that kind of supportive element in terms of limited additional capacity coming into the market last year. So the tanker sector comes into 2026 on a very strong footing. And also, of course, we are seeing those geopolitical elements, that kind of turbulence continue with US actions in and around Venezuela through December and, of course, into January 2026.
Yeah, I mean, you say the market's coming in on a strong footing there. How do you see it sort of progressing as the year goes on? There was a lot of moving parts involved in 2025 based on what you described.
Yeah, and I think front and centre on everyone's minds, certainly at the time of this recording in early January, is the geopolitical situation. I mentioned US actions around Venezuela. Through December, there were a number of vessels, VLCCs, seized by the US, and in early January, they captured another one, formerly known as Bella 1, renamed Marinera. Again, we track this kind of activity on our platform, MSI Seascape, which looks at vessel movements and analysis around the world across all sectors. Those moving parts on a geopolitical perspective don't appear to be slowing down. And I think we're seeing more and more fracturing of geopolitical norms, certainly a more interventionist policy from the US, which adds to other ongoing areas of turmoil. Of course, we've got Russia, Ukraine, and that in itself has a number of elements which will kick in or continue in 2026, including the EU ban on refined product imports from Russia-derived crude, which will have some effect of reshaping product trade volumes this year. And we also saw, perhaps less well publicized through Q4 25, Ukrainian attacks on Russian vessels in the Mediterranean region as well. So the tanker sector is literally under attack in terms of vessels being seized or attacked. We've got other areas such as Iran as well, which is also seeing some protests and has been subject to US measures and sanctions to try and suppress its oil exports. So those moving parts continue. And I think let's look at it purely from the perspective of the tanker market. These typically tend to be positive elements in driving up, of course, uncertainty, energy security, and typically tanker earnings when we see more and more geopolitical turmoil. So that continues to be layered on top of what we expect to be quite a positive picture in terms of trade volumes in 2026 as a consequence of still relatively high production. And I should say, from a kind of oil market fundamentals picture, the oil market is oversupplied. Crude production is high relative to quite subdued oil demand growth. So we're seeing that build-up of stockpiling as well in 2026. That potentially has some pitfalls for the market, for the tanker sector later on, if conditions become oversupplied and we start to see a pullback in production. We've seen that kind of thing happen before in for example, 2014-15, and that can have a negative effect further out. And also we're going to start to see deliveries increasing for tankers this year, and they're going to stay high through the next few years because we have seen very high levels of contracting in the market, certainly in 2024, but also 2025. Latter half of 25, we saw much stronger ordering of larger crude tankers, Suezmaxes, and particular VLCCs. And so all of that new tonnage is going to come through into the market and start to add a bit more of that fleet side pressure on earnings conditions that hasn't been there for a few years.
So you've got some quite sort of potentially positive factors from the geopolitical disruption, but the actual demand and supply picture does sound like it's going to sort of not be as good as the year goes forwards.
We think it will be pretty positive in 26, and we're talking perhaps a little bit further out in terms of 27, 28, how things may swing around. But of course, there's a lot of uncertainty within that. We've mentioned Suez Canal. That adds another layer of support for the market, which could change over time. We started to see a bit more traffic going through there on the product tanker side more recently. So yeah, there's a lot of these kind of conditional factors which could move in different directions to potentially support the market. We're positive in the near term, but yeah, a bit more cautious going further out.
Okay, fair enough. I think I just want to come back to one thing you mentioned earlier, and that's really on the tanker seizures that we've seen in the last few days. And the dark fleet, which has been, quite a sort of a big feature of the tanker market over the last few years, is this going to change how that's been working?
It certainly changes the dynamic. I think the fact that the US has started seizing tankers linked with Russia is a new development. This has obviously been a major factor since the start of the Russia-Ukraine war. I don't see it changing in terms of the fundamental dynamic, which is that Russia or the ship owners that are servicing Russian crude and other crude from Iran and also Venezuela will require tonnage. It's a growing component of the fleet. The sanctioned component of the fleet has also grown significantly. So actually, when we look at some of the major tanker segments, so for example, Aframaxes, uncoated Aframaxes, which are the sort of workhorse of the crude sector, if you like, versatile, the smallest major element in the crude tanker market. About a third of that fleet is under sanction, and significant proportions of the Suezmax and VLCC fleets are as well. So these factors are rising. I think it will continue to be an unknown factor in the market going forward. There will continue to be demand for older tonnage. We're seeing very little scrapping of tankers happening because older tonnage is just moving into the dark fleet. And so there's more and more restrictions on vessels available for charter from more kind of conventional chartering agents, and it poses more and more restrictions on the fleet. So I think the US-Venezuela situation does change the dynamic, but the kind of dark fleet remains both a risk to the market, because obviously there's a huge risk in terms of these vessels that are badly maintained, inspected, and so on, seeing major incidents on sea, but also it continues to pose a risk in the sense that there becomes less and less tonnage available for kind of conventional charterers as the tanker fleet is aging rapidly now.
Okay, so yet another sort of a factor in that whole mix that we were discussing. It's going to be really interesting to come back in 6 months' time and see where all this has gone. Thank you, Tim, for taking the time. Thank you for listening to the Seatrade Maritime Podcast, and we look forward to joining you on our next episode.